So we'll be focusing on our viewer queries today because there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at now to help you navigate through this maze? Today I have with me Pankaj Mathpal, MD, Optima Money Managers. And in case you want to send across your portfolio queries, you can do that on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the moneyshow@etnow.tv, and we can do your live financial planning on the show with our experts. Pankaj, hi, good evening and welcome to the show. Let's quickly take our first viewer's question, which is Manjit. And he says that he is 38 years old and currently he's doing his SIP from last 1 year in Parit Flexi Cap. 5,000 rupees SIP, HDFC Mid Cap Opportunity 5,000 SIP, Mirror Asset Emerging 2,500, Axis Small Cap 4,000 SIP, Nippon India Small Cap 5,500, HDFC Balance Advantage 3,000 rupees. Total SIP amount every month is 25,000, and he also wants to top it up once the market falls. He will be doing a step up every year as well. He's lined up a few goals for himself, which is child education after 18 years, 2 crores, retirement 4 crores, and right now I think he told he's 38 years old. So these are the two important life goals that he's kept for himself: child education and retirement. So let's take your suggestion on the fund mix, Pankaj.
Kavita, good evening. See, fund mix is good, but thing is that sometimes we have to see the suitability of funds. See, one is that funds are good or not. So all the funds are the best performing fund in their respective categories. But because he wants to invest for a long term, so some changes can be suggested. For example, he has HDFC Balance Advantage Fund, and as he wants to invest for minimum 18 years for his daughter's education and then retirement after 20 years, so he can replace that fund. And like he has Mirror Asset Large and Mid Cap Fund, so he can cancel his SIP in HDFC Balance Advantage Fund and divert that amount to Mirror Asset Large and Mid Cap Fund. So that is one change I'll suggest. Second thing regarding the target. See, if I assume 12% CAGR, he can expect around 3 crore 40 lakhs in 18 years. But after withdrawing 2 crore rupees for child education as he has planned, the balance amount will not be sufficient for retirement after 2 years from there. So considering that fact, I'll suggest that he should increase his investment from time to time. He should top up that. And fund mix is good. I have just suggested one scheme where he should consider a change.
All right, so that's the solution for Manjit. I have our other viewer online, which is Raj. Raj, hi, good evening.
Good evening, Raj here.
Hi, so we've got your question with us. Thank you so much for sending it across. SBI Contra, you're investing in ABSL Frontline Equity, SBI Infrastructure. You have Nippon India Growth, you have Parag Parikh Flexi Cap, you have Franklin Templeton India US Opportunities, and you want to invest more 15,000. And for 5 to 7 years, you will do an annual step up of 10%. And you have more funds, which is Franklin, Build India, ICICI Multi-Asset, LIC Large and Mid Cap, and Quant. Yeah, right. Okay. So you've been investing in all of these funds since when, Raj? How long?
My target is around 5 to 7 years.
5 to 7 years. And you've been investing since how long?
I've been investing in this fund. In these particular funds, I've been investing since last 2 years. But in mutual fund, I'm there since last 20 plus years.
Total amount of SIP that's going on right now is 15,000, right?
Now 15,000.
Okay. All right. Any specific corpus that you have after 5 to 7 years?
10 crores.
10 crores? Okay.
Yeah.
All right. Let's see if that's achievable. And also looking at the quantity of funds, can you consolidate it? You know, that also can be asked. Pankaj, so what do you think about the funds, first of all? Because is he too diversified, over-diversified?
Yeah, Kavita, what I understand that, Raj, you can correct me if I'm wrong. You have some funds already in the portfolio and you want to add some more new funds. What
Yes.
you have selected few funds and you want to add them, correct?
Yeah, the
Yeah,
last four funds, I think Franklin Build India, ICICI Multi Asset, LIC Large and Mid Cap,
yeah,
and Quant Small Cap is something you are considering, right, Raj?
yes.
Okay.
Even this
Raj,
Build India has given
I'll suggest.
81% in the last 1 year.
Yeah, right, right.
So Raj, in
Yeah,
that case,
Pankaj.
because you already have good funds in your portfolio, so you should not increase the number of funds. Yeah, I understand that some categories are missing that can be added, but not all these four funds what you have selected you should add to your portfolio. See, like you have already have six schemes in your portfolio. So the new schemes what you have selected, out of that LIC large and mid cap fund you should skip. You should not consider that. In large and mid cap category, I'll suggest that Motilal Oswal large and mid cap fund can be considered. That is one choice. Second thing, in your existing portfolio, you do not have a small cap fund. So Quant small cap fund can be considered. And Franklin Build India fund, you can skip because you already have one infrastructure fund in your portfolio. If you want to increase the amount, you can increase in that scheme itself. And ICICI Prudential Multi-Asset Fund can be considered because it will give you exposure to gold as well as debt. That can be there. And rest other funds are good. So from the new funds, only ICICI Prudential Multi-Asset Fund can be considered and Quant Small Cap Fund. Rest two funds you can skip.
Okay, so multi-asset and a small cap, it's recommended. And I think he told 10 crores. What should be the approximate monthly investment amount, Pankaj?
No, 10 crores in 5 to 7 years. That then uh, I can't calculate right now, but please something like in lakhs. So if you have already accumulated some amount, that can help you. But to accumulate 10 crore in 10 years, 5 years, it will be a very large amount. So what you are doing right now is very far from the amount which should be invested.
Okay. Additional 15,000 to be divided in the existing funds that you recommended?
Yeah. So like he has large, you have large cap fund, ABSL frontline equity. Raj, you have SBI Contra fund, Nippon India Growth Fund, that is a multi cap fund. Sorry, that is a mid cap fund, Parag Parikh Flexi Cap Fund. So in these funds only you can allocate this. In addition to this, Quant Small Cap Fund as you're adding, and ICICI Prudential Multi Asset Fund, in those funds you can allocate it. Equally, you can divide that money.
All the best, Raj. Anything else you want to ask Pankaj?
I want to ask.
Thank you so much. Thank you. We move on. Let's take Arvind's question, and he sent this question by email. And the funds that he has in his portfolio, Pankaj, are Quant Small Cap, 1,500 rupees SIP, Parag Parikh Flexi Cap, 1,500 SIP again, SBI Large and Mid Cap, 1,500 SIP, HDFC Balance Advantage Fund, 1,000 rupees, and 15 years is the time horizon. And he's looking for a corpus to build for a corpus for his child education. And yeah, he's an army professional as well. So, okay. How much do you think he should be increasing his investment amount to?
See, if the target is 1 crore, then he'll have to almost miss 4 times, because if I calculate at 12% CAGR, it comes around 26 lakhs in 15 years with the current investment. So if he wants 1 crore, it means it has to be 4 times. So if it's not possible right now, means he can increase, he can do step up SIP, and whenever possible, he should top up his investment, then it may be possible. But fund mix is good. All the categories are there, like he has large cap, mid cap, small cap, either directly or through the flexi cap or multi cap. But fund mix is good. Only thing is that target is big, and the amount, even if we assume 15%, then also it is very far from the target. So you'll have to increase your SIP amount.
All right, so that is one thing that one needs to take care of, increase the SIP amount. And he doesn't need to increase any fund, right? Just an SIP amount will be divided into these funds as well?
Exactly, because he has exposure to all the market segments, so he doesn't need to add any fund as of now.
All right, so a lot of common funds that we are looking at, Pankaj, in most of these profiles, we are looking at a lot of a balanced advantage category fund. We are looking at a lot of large and mid cap, which is repeatedly seen in investors' portfolio. Again, a Parag Parikh flexi cap and a quant small cap also. So the kind of trend that we are witnessing is, a lot of investors, a lot of our viewers who are sending us queries, they are looking at top performing or best performing funds, and that is what they are, making it a part of their financial plan or a financial portfolio. Now, having best performing funds in your portfolio is one thing, but then, changing it every now and then as per performance, as per fund performance, can just backfire this entire strategy.
Kavita, I fully agree with you. See, usually investors follow the trends. And whenever we see that particular trend, particular scheme, particular category is outperforming the broader market or their peer groups, investors invest in those funds. So ideally, investors, when they start investing, they should look forward. Means the schemes which have potential to deliver better returns going forward should be selected in the portfolio. But generally, as we are seeing here, quant small cap fund or HDFC Balance Advantage fund. If you take the example of HDFC Balance Advantage, see, this fund can be suitable for the horizon of 4 or 5 years. But when they are investing for say 15, 20 years, then also they have included this fund in the portfolio. It is just because of the past performance. So you have to see funds means category wise how they are performing and how they can perform in future. Second thing, their suitability as per your financial goals. So it's not only the past performance, but future expectation from those funds is important, and your risk appetite, your financial goals, that has to be considered.
We are answering our viewers' queries, and I have with me Pankaj Mathpal. And let's move on to our next question, which is from Gotham. And Gotham has sent us a query via email. And he says that he's been doing SIPs and he is planning to continue it for a long term period, and the funds he's got in his portfolio, Pankaj, are Franklin Flexi Cap Fund. He's got HDFC Hybrid. He's got Kotak Flexi Cap. He's got SBI Flexi Cap, ICICI Balance Advantage Fund, and Axis ELSS, and DSP Mid Cap, Parag Parikh Flexi Cap, Mira Asset Emerging Blue Chip. And target is 3 crores after 15-20 years. And he also wants to know that the fund mix is good for him. He has other fixed income investment also. He's got PPF investment every year, 60,000, NPS 50,000 per year, Sukanya Samriddhi 30,000 per year, and Atal Pension Yojana for both husband wife. He's got term insurance in place, 1 CR, health insurance 1 CR, LIC 5 lakhs, PF again is 11 lakhs. So thank you so much, Gotham, for such a detailed email. You've spoken about all your investments in this mail, and this will really help us draw out the perfect strategy for you. But having said that, 3 crores in 15 to 20 years. Looking at the current SIP amount, do you think he needs to increase his SIP?
Kavita, he'll have to increase or he can step up this. So from time to time, he can increase, if not right now. See, if I do a calculation at 12%, it comes to around 1 crore 66 lakh in 20 years with the SIP of 18,000 per month. So, and he has other investments as well. So you can expect around 1 crore from those investments in LIC as well as in Sukanya Samriddhi Yojana. So whatever he has PPF, so put together, you can expect around 1 crore rupees. So he's very close to 3 crore, but still he should step up his investment in mutual funds. Second thing is regarding schemes. He has 9 mutual fund schemes in his portfolio, and there is a little over diversification. So I'll suggest some changes. First thing, Axis ELSS fund. If Gotham needs for his tax saving, then he can continue it. Otherwise, he can cancel his SIP in that scheme. But apart from that, Parag Parikh Flexi Cap Fund and Mire Asset Large and Mid Cap Fund, which was earlier known as Emerging Blue Chip Fund. So these 3 schemes he can continue, and he can consider stopping other schemes. And 2 schemes I'll suggest him to add, because he's missing allocation in mid cap and small cap. So mid cap, Motilal Oswal Mid Cap Fund can be considered. And small cap, I'm not suggesting directly, but one multi-cap fund like Kotak Multi-Cap Fund can be added, which will give exposure to him in small cap as well as large and mid cap. So 2 new funds and plus only 3 funds from the existing portfolio.
All right, so these are the changes that one needs to do, and that's it. I think the rest of the plan is already available there, and he's doing good. We move on to Parikshit's question. That's again via email, Pankaj. And Parikshit Kulkarni has ABSL focused equity 6,000 SIP, UTI mid cap 4,000, Kotak emerging equity 5,000, ICICI Pru multi cap 5,000, Nippon India and SBI large and mid cap 5,000 each. And all his SIPs are going through distributors, and he wants to change it from a regular plan to a direct plan, and he's been investing in ABSL and UTI fund since 2017. So he wants to know if he can change them to direct, and should he be doing that or not. Current value is almost 2 to 14 lakhs. He's talking about the overall invested amount, and any change that's required in his portfolio. He also wants to put some money lump sum, and he wants to do an SIP, a one-time SIP. So is that advisable, and additional SIPs if needed as per his financial goal? Pankaj.
See, Kavita, for Parikshit, first thing, as he wants to know that whether he should switch from regular plan to direct plan, the answer is very simple. If you need service and advice of your distributor or your advisor, in that case, you should not switch. Otherwise, if you feel that you can do all the things, transactions or knowledge about the funds you have sufficient, in that case, you can consider switching from regular to direct plans. Second thing, switching from regular to direct or direct to regular, it is like redeeming from the one kind of schemes and then purchasing units of other schemes. So it means exit load may be applicable in some cases, not for Parikshit because he's a long-term investor. I think or maybe SIPs which have not completed 1 year, there may be exit load applicable. But yes, capital gain is another concern. Long-term or short-term capital gain tax will be applicable here. So Parikshit has to understand that as well. But as I mentioned earlier, if you do not need services and advice of your distributor, then you can consider switching from regular to direct. As far as changes are concerned, I'll suggest that from UTI mid-cap fund, you can switch to Motilal Oswal mid-cap fund if you are considering from regular to direct. So in that case, even change the scheme. And for lump sum investment at this point of time, large cap fund will be a better choice, and Nifty 50 equal weight index fund, which is a passive fund, ICICI Prudential Nifty 50 equal weight index fund or HDFC Nifty 50 equal weight index fund can be considered.
All right, so that was Parikshit's question. Let's take Aditya's question. That's again via email, and he's been looking at building 25 crores via 25 years now. He's been doing SIP in HDFC Top 100, Nippon India Growth Fund, SBI Contra, Parag Parikh Flexi Cap, SBI Small Cap, and UTI Nifty 50 Index. Pankaj.
Yeah, see, schemes are good. All the mix is there. Only one thing is missing, that is international fund. So if he adds one passive fund in this category, like ICICI Prudential Nasdaq 100 fund, so it will give you further diversification of international equity as well. And as Aditya has mentioned that he can increase his SIP to 2 lakh per month. If he does so, then you can expect around 34 crore in 25 years. So if it's possible, you must consider increasing your SIP amount.
All right, so he really needs to increase SIP amount, but then a good mix of having passives and active in the portfolio. A lot of investors are going for a passive strategy as far as large cap is concerned. That's what we can see in Aditya's portfolio as well.
Because we have seen that in case of large cap, active funds, most of active funds fail to beat their benchmark. So considering that fact, it is a good choice, and one can have both the strategies, one active, one passive. That also make good sense.
Let's take one more question from Narendra Tiwari, and that's again an email question, Pankaj. He has HDFC Tax Saver, and he's been investing in this fund in last 10 years. HDFC Top 100, 3,000 from last 10 years. Parag Parikh Flexi Cap, he's been investing 2 years, 3,000 rupees. Kotak Emerging Equity, 4,000 since last 4 months. HDFC Flexi Cap, 2,000 rupees from 4 years. SBI Small Cap, 4,500 last 7 months. Canara Robeco Flexi Cap, 4,000 rupees. 2 CR in 10 years. And so far, total corpus accumulated is 26 lakhs.
See, there are too many funds. If you see in flexi cap category, there are 3 funds in the same category, and underlying stocks are almost same. But still, because choice of funds is good, so right now I'm not suggesting to stop any SIP. You can continue. But as far as target is concerned, it's difficult to accumulate 10 crore in 10 years. So 2 crore in 10 years. So it's difficult because what you are investing right now in 26 lakh has been accumulated. Time is only 10 years. So 10,000 per month, you will have to increase from here. And then every year you step up by 10%, then it is possible. So if it is possible, then you do it. Increase your SIP amount by 10,000 right from next month. And then keep increasing by 10% every year to achieve your target.
All right, I think that will be all, and that's all the questions we have on the show today. Thank you so much, Pankaj, for being there and helping our viewers. And just in case you also want to get your financial planning done on the show by our experts, you can send across your questions via email, or you can WhatsApp your questions on 8657974571. That will be all on the show today. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.